Good afternoon, everybody. Welcome to the After Market Monday. We want to be checking out what's going on in the market today and also moving into the week. Remember, all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. One of the things we want to remember, I'm going to be giving a little short presentation on seasonality prior to the end of the year, so we're looking forward to that going into the year. There are recordings on, if you're a premium member, there are training recordings about seasonality on the website under the training videos, and so you can check that out also. So it'll be a kind of just a real quick refresher coming up, but let's get in. We've got 10 to 15 minutes to get through what we're looking to get through today. The objective of the Aftermarket Monday is to basically provide timely, actionable intel at the beginning of each week, a quick market review, any stocks, ETFs setting up, and then just to remember, hey, 2018 refinements to Active 10 trading system for all member levels, composite watch list that'll be coming out today, and an analysis of the same, enhanced portfolio building trades, and then simplified training for simplified training opportunities is one of the things we're providing. So remember, have patience, stand back, and respect the rhythm of the market. Here's one of the things we were talking about, seasonality. We're in this December time frame over here, and you take a look and say, hey, NASDAQ oftentimes pulls back a little bit before it launches into its end of the year Santa Claus rally. That's what we are expecting. And again, remember, seasonality, even though this is measured over a 20-year time period, and this is the ebbs and flows of the market during that time frame, and we have seen that they line up fairly well on when to position yourself to buy into the market. It is a tendency in the market and not, it's not an absolute. This is exactly the way the chart's going to be, because you look at a chart of the NASDAQ this year, it doesn't look exactly like this. But what we have found is when it does hit its low sections, that's on this chart, time-wise, you're typically looking at a 1 to 2 weeks plus or minus on either side when you're getting a similar type situation setting itself up, a buy situation, in other words, setting itself on the regular NASDAQ charts. And it works that way for the NASDAQ, it works that way for the S&P, it works that way for the Russell, and also the other index, other ETFs that we're taking a look at. Here's what I'm looking at, just taking a look at what's happening. And again, premium members, you will get the triggers on these because this is an open, since this is an open session for everyone, for anybody who wants to join. I just share what we're trading, but basically you guys get all the triggers on them. USO did shoot off a daily TSI signal, but it's out of sync with the weekly, so sometimes those tend to be a little bit weaker signals. Some of the other things that we're looking at, Tesla broke the downtrend line, and now the TSI on a weekly basis is ticking up. So we'll be taking a look at that tonight to see if that's worth a trigger. NVDA, we're in a downtrend, but it's pulling up to the 8-day moving average. Hasn't broken out yet. We'll just see how the market responds this week. Remember, the week of monthly expirations, which this is that week, tends to have a bullish bias. The second thing that's happening this week that we want to keep our eyeball on is that it is the Fed week. Now, if the Fed, which all the bets are saying that the Fed is going to increase rates this week. So I'm waiting to see what kind of impact that is going to have on the Russell, the small caps, the NYA, and also the Russell RUT, and how it will impact IWM. The residual of any negative impact on Russell may spill over to positive effects on the NASDAQ, the Qs, and or the SPY. XLF extended. The biotechs have started a pullback, and we'll take a real quick look at the chart of that. It's maybe pulling back into a support level for a potential trigger. GDX, daily TSI is still falling, and is still falling. It is approaching a stronger level of support. We'll see if we get it. We'll see if that in fact does hold. USO, that's the oil. It is in fact daily TSI, but out of sync. We talked about that briefly. NVDA downtrending. Netflix TSI tick up and close on a weekly. Netflix is just kind of posturing itself before a potential move. We'll see if it does move. Possible catfish special. Those of you who don't know what a catfish special is, it's basically, it's not really a bottom feeder type approach, but what it is it's looking at the IBD growth stocks that have been on the IBD 50 sometime during the year of 2017. And they fell out of favor, they fell off that. Well, I keep track of all of those in what I call my running list. And oftentimes when they get down towards extremes to the oversold condition, those can often set themselves up for a opportunity to get long at the proper time. And I just call them a catfish special because, you know, catfish is a bottom feeder, those of you who are not catfish aficionados. How many like catfish? Those of you who are. Do you like Cajun style catfish? I know I do. WNC, we're still looking at that as a potential play. 20% range on that. And then YY, close to a daily TSI setup, but it's bouncing around a lot. I mean, it got a really nice run and then has basically slowed down and stopped. And there was a couple more that I was looking at, SMT, MCHP, and COM, C-O-M-M, but COM's got to come back a lot. So let's take a look at what's going on here. What else are we looking at here? Okay, UCO. Here's why I just list out everything. Seasonal expectation is Santa Claus rally in the last 2 weeks of the year. We may have to switch and go off of the intraday chart to be able to get a trigger in on that. Others on the radar, WNC, YY, and STMP. What are we looking at going? I want to remind you, one of the reasons why I offer this free webinar and then also its sister webinar, which is Making Money Trading Stocks and ETFs on Friday, is 10 to 12 times per year I will be offering to active trend trader members, that's all level of active trend trader members, bonus trades. We've had 2 bonus trades so far this year. We started doing this in October, and we've had play, we've had YY. Both of them have turned out okay. YY didn't quite get as big a run after prior earnings as we wanted to, but that's okay. But I'll be doing, you know, somewhere 10 to 12 trades per year. And so, Andrew, yes, it is. Now's the time. We can talk about that separately, yeah, but on the strategy 3 trades, that's why they go out with a stop loss on them when the email goes out to say this is what the stop loss is. And then secondly, speaking of strategy 3 trades, we will be having training for premium members, and I'm going to be basically offering it also to non-premium members for how to set up the strategy 3 trades going into 2018, because they've done quite well, you know, every year that we've been running, all the 5 years that I've been running it also. So yeah, Andrew, on the strat 3 trades, it depends on what kind of strat 3 trade it is. If it is a strategy 2 trade, if it is a spread, a lot of times I would just let the spread, you know, time out towards the end of the week, and I either buy it back at, okay, it's not in the text. That is in the follow-up email alert that went out Friday afternoon. Okay, thanks. So let's see. Just as a reminder that we do offer, right now we are offering a bonus through the end of the year. The active trend trading membership, the premium member, at a 40% saving or $44.99, and then also the early warning alerts, index ETFs, which my trading research partner has been trading for, gosh, almost 10 years now, and that's $249. It's a yearly membership, and typically gives us somewhere between 1 to 11. It's an average of 6 trades per year on the index ETFs. So now let's look at some of the charts that we're looking at. I got to pull up my, there we go. Boom. And one other thing. There we go. There we go. Okay, let's start with the SPY, or this SPX. As you see, SPX basically has driven higher when it came down and hit a low Wednesday last week, bounced off the 8-day moving average, is moving back up into the resistance at the past highs, 2665. It is showing some negative divergence on a daily TSI, and we have the basically all of the well, almost all of these indicators here on the market forecast reaching up over the 80% level. Oftentimes that's a prerequisite for a sell-off or at least a pullback, and it would be nice to see a couple of days of pullback and then a rebound to go into the Santa Claus, but that boat may have already sailed. But we'll keep watching. That's why I said we may need to watch the index, the intraday, to get a trigger off of those. Here again, NASDAQ, negative divergence, pushing up close to its past highs, but the TSI is not pushing up that much. As you can see on a weekly chart, it's just kind of driving sideways here. And so just shorter term trades. The one that I do like, and it's going to depend on what happens with the Fed this week, of course, is the Russell. It is giving us a nicer pullback. I would sit there and take a look at IWM. Just draw you a little trend line down across here. Let me get that blown up a little bit. We can draw a little triangle against those two tops, or from here down, from this line here, down to the lows. There we go, from there to there. And if it breaks back up through that, that would be a buy. Or if we get back down here about the 150 to 150.75 level, that would be a potential place to buy also. If we want to translate that over to TNA, again, similar type situation. If it gets down into the 20-day moving average, which it came close to today, or if we break out above the high of the low day, which was this day here, that would be a potential buy signal on TNA, with your stop loss just being right below the swing low right there. And so, yeah, Eric, it has SPX. I'll just take a look at SPY really quickly. That is crossing. That is a positive cross. However, when they tend to cross up here, closer to the high, it could be a continuation. We'd like to see more of a pullback like this. We may or may not get it. So you're absolutely right. And it would have been a good trigger in on Thursday or Friday of last week. And now we're just pushing higher because now we're right up against resistance, and it's got to break through this level before we reconsider it. And that's where I would switch to the intraday chart, hour chart, to take a look at what's going on with that. And let's see what else we got here. Here's what I'm talking about. We're just getting kind of a reversal signal on the biotechs. And watch, I'm going to set a couple of alerts. I'm going to set alert here at 6320. I'm going to set also alert down here at the 6200 level on this particular entity. And if it gets down to that area, that would be a strong level of support. Watch for a reversal there. And then tie that into LABU. And it corresponds with LABU getting down here about the 67 level, or down below 60, between 63 and 65. That would be a potential trigger point to move back to the upside, because as you can see, we Pinocchio'd this this trend line today, and it reversed down hard with this slight uptrend. So watch for a pullback in, back into this moving out, into the uptrend, or down into this strong support level. Okay, NVDA. And so I want to show on Tesla. Yeah, on the email that did go out, it said if we're popping back up above this level, that would be a time to go ahead and just exit on Tesla. Tesla has now put in a strong move up to the upside on volume, so it is back above all of the moving averages again, especially the 50. So we're going to watch this moving forward. We may need to close out the strategy 3 position, because that was our second go around with Tesla, but that just closed that out prior, for a smaller gain than we wanted to. But again, the earlier trade on Tesla did generate a 100% return on it. So, and that is part of the volatility of strategy 3. But as you can see, we're pushing up, and right now I own the 370 call put straddle that expires in January next year, and it's not a problem with closing it down with 2 weeks left in the year, and just we will put out the training on here's how we go into it going into 2018, and then everybody can be trading from the same point in time. Now you can start this kind of trade anytime, but I find it I won't say best, but it just seems to lend itself to more room to let the trade work out if it is started closer to the beginning of the year. So that's that. What else we want to look at here? Gold. Let's take a little look at Nugget. As you can see, Nugget is pushing down towards its low, but compare that to GDX. GDX is also pushing down towards this lower low of about $21. Okay, $21. We'll see if we get a bounce up from there, and it goes in. If it will reverse into a better stance for gold, and we can actually take this trend line here, activate, and redraw it over here. But then also we have this trend line. It goes from about there down through here. So if it breaks that trend line back here, look for it to pull back into here. So, okay, TSI, NVDA. Okay, NVDA still hanging below the 8, just slightly staying inside of last week's this bearish engulfing we had last Friday. But if it busts up much more, then, well, it can go ahead and go all the way up to about the 50. But this is a bearish signal. Drop the 50 on higher volume, pulled back up, and is testing and anticipating some kind of a reversal back down to the downside. If it pushes on higher and then reverses, as long as we don't break up through this past high, then that would just be a retest, failed to reach the new high, and then a pull back down to the downside. Netflix kind of doing a similar type of thing. It is basically, just pay attention to this uptrend, these lines here. It came up and butted its head against, the about 189 this morning, and now it's pulled back down below the 8. We don't really like that, but if we, I don't think we have a Netflix, but this could also be one of those where Netflix closed below the 50, excuse me, on higher volume, went up, tested. Now this may be a second test, and so we may want to be looking at Netflix actually for it attempted to rally. That rally failed, and away it goes back to the downside. So we may want to be looking at a downside trade on Netflix. We shall see. Well, and I'll be putting out what I find from my analysis tonight. So, okay. Okay, that covers us right now for Aftermarket Monday. Gives you some idea what we're looking at. I will throw up 2 more of the ones that I am looking at, YY, come on, YY. YY came screaming out of the this support here from its past breakout on higher volume, but then Friday it just kind of went and stopped. So it's sitting right at the 8-day moving average, and so I'll be looking to see what this is going to go either one way or the other. I would prefer nothing happened to it until after. I would prefer nothing happened to it until after Wednesday, and I expect usually on a Fed week you will get not a lot of movement normally until after the Fed does its thing. So I'll be keeping my eye on this one, and I will also be keeping my eye like COM on a pullback. COM had broken out and it's back up at support, so watch the pullback in COM back to the 820 combo, and the other one is STMP. STMP has already pulled back, and it's got good support down here about 160. It is trying to make up its mind what it wants to do. Volume's a little bit anemic for what it's doing out here, but it's low. It's not. It's basically as low volume as it continues the basing process. This could be turned into one of two kind of patterns, and this will be my last point for today. This could be turned into one of two. Two patterns. A kind of a box pattern where it's dropped down. It's found support. It breaks back up through these support levels, about the 180 level, and climbs all the way back up to 230. Okay, and does it fairly quickly. We'll see if that transpired. Or this is a lower kind of a pennant slash bear flag kind of flagpole, where this is the flagpole. This is the flag, and if it breaks out the bottom here, you're going to get a run equivalent to approximately 225 to, let's say, 160. That equates to about $65, and so you take from 160 down $65 is going to put you around 90-ish, which would be around this level over here, which just happens to be right around where it found support and broke out previously. But that would be a huge round trip of this move from here to here, and that would be a round trip. So GSM is a component of GDM. It was a stock on the move. Okay, excellent. Yeah, just watching those, Eric. It turns out, John gave us an email. It turns out that Dust would have been a better trade for us than trying to wait for Nugget, but that's just part of the thing that we'll be seeing more of that or correcting that going into next year. So, okay, guys, that's it for today. We'll see if you are a premium member. See you on Wednesday night. We're going to be talking about the elements of the elimination of some of our bad habits prior to going into 2018. And then remember, I haven't put out the invitation on yet, but I will do a training Saturday, December 30th at 9 o'clock Pacific time. God bless everybody. Have a great rest of the week. Aloha. Good day, traders. This is Dennis. During the month of December, the premium membership for the active trend traders is going to be offered at 40% off its regular monthly membership amount, $44.99, and early warning alerts. You can jump on early warning alerts for $249, which is 50% off the regular yearly membership. So don't miss out on this opportunity. Aloha. God bless everybody.